Hi. About a year ago, Christian Garcia broke a news story about the state of Carolina making a determination that gold and silver was a bad investment because it was a manipulated market, and this was the first government admission that the gold and silver markets are manipulated. And Christian broke that story through some good investigative reporting, and he's done some more investigative reporting. So for those of you that have followed us for less than a year, I want to introduce Christian Garcia. He's one of the members here at goldsilver.com. And so tell us about your original investigation and where it's led you on this latest investigation.
Absolutely. Thanks, Mike, for the introduction. Well, the original investigation had to do with Proviso 89.145, and in it discussed how the state government was debating on whether to invest state funds into gold and silver, and they obviously issued a commission to investigate the matter. Well, their findings were that they didn't want to investigate or invest in precious metals because they were manipulated. And in the report, they disclosed who those participants were, those culprits. And in it, they named the LBMA, JP Morgan Chase, Hsbc, and the Federal Reserve. You know. And
I find this interesting because the manipulation is the reason that I invest, and here the state is saying it's the reason that they don't want to invest.
Exactly.
All manipulations fail. There's never been a manipulation that has been carried out forever.
That's right.
Any time in history.
Exactly.
They eventually fail, and a manipulation just causes prices to go far higher than they would have had there not been any manipulation.
Exactly.
So, anyway, go ahead.
Definitely. So that's what it was. So it was just, like, again, Proviso 89.145 if you guys want to look into it, from the state of South Carolina. And so what I was really trying to accomplish this time around, Mike, was obviously we sell a lot of U.S. silver eagles, and I was just looking into the numbers to see what they would look like the years to date so far. So as I dug into the report from the U.S. Mint, I came across this heading titled Treasury-Owned Custodial Gold and Reserves. And what struck me was the very last paragraph, which said, Treasury also allows the Mint to use the silver as working stock. However, Treasury does not have enough silver to fulfill all Mint manufacturing needs. Accordingly, for the purpose of avoiding market risk associated with owning silver, the Mint has entered into a silver hedging arrangement, and to see Note 20.
Okay, so I think this is interesting, first of all, because it's an admission that they don't have enough silver. What they say in the paragraphs before is that they've got plenty of gold, and basically what they do is the Mint uses some of the Treasury's gold, they mint coins, and then they replace that gold. So as they're minting it, they buy gold off of the open market and replace the gold that is their working stock that they're using. They mint coins until they're down to zero, and they replace the gold. They mint coins, they replace it, they mint coins, and they replace it. With silver, they don't have any working stock, so they're admitting that the government doesn't have any silver. Now, the U.S. government used to own the world's largest stockpile of silver back in the 50s and the 60s. It was like half of the above-ground silver was all owned by the U.S. government. It's gone. That was dumped into the market from the 60s until 2003 is about when they ran out of it. And coincidentally, 2003 is when silver's price finally started taking off.
That's correct.
So, okay, tell us more about it. So it says to see Note 20?
Exactly. So
okay.
I flipped the report and I went to Note 20, and it just says that, you know, at September 30th, 2012 and 2011, the market value of the silver sold to the trading partner and not yet sold by the Mint, and therefore not repurchased from the trading partner, was $241.5 million and $247.7 million respectively. So those are pretty high volumes of silver that they're dealing with. And so it was getting.
So that was for last year and the year before, is what they're saying. So
exactly.
This is the 2012 report. So it's for 2012 and 2011 was the respective figures. Okay.
Exactly. So, you know, that got me thinking, wow, 2011. So this has been going on for a while. So I decided to look up, you know, the 2011 annual report, same paragraph, similar language. And, you know, again, at the end this time, again, it mentions, you know, the very last couple paragraphs talks about the C Note 20, and again mentions fiscal year 2010. So again, I was thinking, wow, again, Note 20, more figures, and it mentions the prior year. So again,
and it mentions a trading partner.
And it mentions a trading partner. So this theme keeps running through these reports. So I just go to 2010 report, same thing, same paragraph. This information was different, except it doesn't mention note 20. But if you go through the report, note 20 is still there. It's still titled hedging program. So they're still mentioning this hedging program. You keep going to 2009. Same information, different figures, same title hedging program, until you get to 2008, Mike. And this report, what was interesting is, again, the custodial gold and silver reserves section is the same, but when you get to the hedging program this time,
that is different.
It is different. It's bigger. It provided more details. But what I found interesting was the very first sentence where it says, the United States Mint has engaged in a hedging program since fiscal year 2006 to avoid fluctuation in silver cost as a result of the changes in the market prices. So you said 2003 was when the silver mint ran out of silver, and it took 3 years for them to finally get into a silver hedging.
Well, you know what's interesting about 2006 is that is when I believe SLV was formed, and it was also the same year that Warren Buffett had admitted that he no longer had his 129.3 million ounces of silver. Coincidentally, SLV needed to acquire 130 million ounces of silver to be able to open up for trading. Right. So Warren Buffett magically no longer has almost the exact amount of silver that SLV needed to acquire. And it was also a period of time where silver had its first amazing run-up in this bull market, and its first amazing crash in this bull market. And it was a pretty huge crash. And so they're talking about hedging because of volatility. Well, that was the first year of really big volatility in silver for more than 20 years.
Definitely.
So,
interesting. Okay. That's a good observation, Mike. And so I just keep digging to the reports, and I went back to 2006 when it started to see if I found anything. No new information, just basic information. But either way, it got me thinking, wow, it keeps mentioning in this report here, this is the United States Mint, At first, it was just, who cares that they're hedging? A lot of companies hedge, but this is the U.S. Mint. They produce the gold and silver eagles, which is the #1 sold gold and silver coins. And again, referring back to the hedging program, what I found interesting is they keep mentioning a trading partner. And I was just wondering, trading partner, who could they be dealing with? And obviously, with this whole gold and silver manipulation scheme, J.P. Morgan's Chase keeps coming up, and the focus is on them. So I was thinking, could they be the silver hedge here that? Can the U.S. Mint be the silver hedge that J.P. Morgan is allegedly hedging for? So I decided to confront the U.S. Mint, and I sent them an email. And in it, I just asked them some basic questions, Mike. I asked them, why would you hedge? Is it price volatility or a lack of physical metals? Who does the U.S. Mint, an extension of the U.S. Treasury and government, use as a trading partner? There are only a few big entities that would be trusted or can be used, and the Federal Reserve or J.P. Morgan Chase come to mind. Who is your trading partner? And I believe the Freedom of Information Act allows you to answer and disclose these questions. So can you please answer these questions? Looking forward to a response. And sure enough, Mike, I was fortunate enough, 11 days later, the U.S. Mint did respond. And they said, this is their response. Dear Christian, thank you for your inquiry to the United States Mint. As stated in our annual report on page 40, the United States Mint engages in a hedging program to avoid the effects of fluctuating costs as a result of the changes in the market prices. So their email, they're confirming themselves that they are hedging. And you read down further, they even tell me who their trading partner is. It says the United States Mint uses blank Inc. as a trading partner. Now, Mike, as we know, we can't disclose who the trading partner is. Out of respect for the trading partner, I'm not going to make it public. Feel free to contact the Mint if you want, but the important thing is the U.S. Mint told me who their trading partner is, and I decided, Mike, to look at the trading partner's website and learn a little bit about them. So I went to their About Us section, and when I clicked on their About Us section, I came across this heading here, and it says, Our Operating Banks, HSBC. And I was just like, whoa. HSBC, they're one of the culprits that's mentioned in Proviso
by South Carolina. Yeah,
exactly.
Okay.
So I was just like, well, wait a minute. So what, right? But keep in mind that the Proviso 89.145 does mention HSBC, and they mentioned J.P. Morgan Chase, the Federal Reserve, and the LBMA. So I started thinking, what could the connection be? Is there a connection? So I decided to just ponder this a little bit, and I think that what's going on, Mike, is you got the HSBC here, and they're actually the accountants for the U.S. Mint's trading partner. And since they're the accountants for the U.S. Mint's trading partner, then that means they have access to the U.S. Mint's figures. They know the supply side, they know the demand side. So you talk about insider information, they got it, before the U.S. Mint even puts it on the U.S. Mint's website. So if they ever wanted to play the market or position themselves ahead or whatnot, they could play that. And the HSBC has been in the silver market because according to CME Group, they have the biggest silver holdings, as of August 30th, and coincidentally next is J.P. Morgan Chase. So you got
and their figures are very close to one another, right?
Exactly.
Yeah.
And they're the top holders of of silver. So if the U.S. Mint wanted a silver anyways, they'd have to go to one of these banks to get it, and they're what I believe are hedging it. So again, what I believe is going on is the HSBC is hedging for the U.S. Mint, and this gives J.P. Morgan Chase the legal cover, or when Blythe Masters said, oh, we're doing the hedges for a client, I believe that this is giving legal cover to the J.P. Morgan Chase because they could claim that they're hedging for HSBC, who happens to be hedging for the United States Mint.
So when you say legal cover, there's been an investigation by the CFTC and
exactly,
and the Securities and Exchange Commission.
Exactly, the CFTC and the SEC, correct.
Okay, and it's because of certain entities exceeding legal position limits. Their position, as far as a short position on silver,
correct,
is bigger than what is allowed.
Exactly. Commodity law dictates that you shouldn't really have more than 25% of the first 10% of your contracts in one single side, and you shouldn't have more than 10% of the remaining contracts or something like that. Basically, you shouldn't have more than 10%. Well, the U.S. Mint sells so much that they already exceed those position limits. So, if J.P. Morgan Chase could possibly getting a pass on these position limits or rules by the CFTC because they're hedging for the U.S. Mint, which is a big entity. So again, that could be
so
why.
So this would be the like ticket out of jail.
Exactly.
Is that, well, we're doing it for the government.
For the government,
right.
Exactly. They're involved, and the government, you can't mess with the government. So that could be why for 4 years the CFTC hasn't done anything.
Yeah. Okay.
Yeah. What do you think about that, Mike?
I think it's pretty interesting information. It'll be interesting to hear what Ted Butler has to say about it. So,
definitely, and Chris Powell from GATA too. Definitely. Well, the important thing though, Mike, what I think, is that it doesn't really matter if it is HSBC or not. If they are the trading partner for J.P. Morgan Chase. What I think is important, though, is that there is manipulation going on, and that creates opportunities, because if they're manipulating it, they've been manipulating the price up and down, but obviously we want to accrue and acquire as much as possible.
So if you've got more questions about this, you could email cgarcia@goldsilver.com and sign up for our free newsletter, weekly newsletter at goldsilver.com, and you'll get updates as this develops. So thank you very much, and thank you, Christian.
Thank you, Mike.